Today is Saturday, July 9, 2022. Let us take a look at today's crypto headlines. Two key Ethereum derivatives metrics suggest that $880 was ETH's bottom. 5 events that could put an end to the current crypto bear market. DeFi giant Aave unveils plans for new decentralized stablecoin based on Ethereum, ETH. JP Morgan lost these 3 execs to crypto firms this week despite crypto winter. Please like, subscribe and turn on the notification button to keep supporting our channel. Two key Ethereum derivatives metrics suggest that $880 was ETH's bottom. Data shows Ethereum options traders are less bearish than before, and margin-based markets recently saw some investors go ultra-long on 491,000 ETH. Ether, ETH. Price is up 16% since July 1st and has outperformed Bitcoin, BTC, in the last 7 days. The move could be partially driven by investors clinging to their hopes that the Ethereum network transition to proof of stake, POS, consensus will be a bullish catalyst. The next steps for this smart contract involve the merge, which was previously known as ETH 2.0. The final trial on the Goerli test network is expected in July before the Ethereum mainnet gets the green light for its upgrade. Since Terra's ecosystem collapsed in mid-May, Ethereum's total value locked, TVL, has increased. And the flight to quality in the decentralized finance, DeFi, industry largely benefited Ethereum thanks to its robust security and battle-tested applications, including MakerDAO. Ethereum currently holds a 57% market share of TVL, up from 51% on April 8, according to data from DeFi Llama. Despite this gain, the current $35 billion in deposits on the network smart contracts seem small compared to the $100 billion seen in December 2021. Further supporting the decrease in decentralized application use on Ethereum is a drop in the median transfer fees, or gas costs, which currently stand at $1.32. This figure is the lowest since mid-December 2020 when the network's TVL stood at $13 billion. However, one might attribute part of the movement to higher use of Layer 2 solutions such as Polygon and Arbitrum. Options traders flirt with the neutral range. Traders should look at Ether's derivatives markets data to understand how whales and market makers are positioned. In that sense, the 25% delta skew is a telling sign whenever professional traders overcharge for upside or downside protection. If investors expect Ether price to rally, the skew indicator moves to -12% or lower, reflecting generalized excitement. On the other hand, a skew above 12% shows reluctance to take bearish strategies, typical of bear markets. The skew indicator briefly touched the neutral to bearish range on July 7 as Ether completed a 19% rally in 4 days. But those option traders soon shifted to a more conservative approach, giving higher odds of a market downturn as the skew moved to the current 13% level. In short, the higher the index, the less inclined traders are to price downside risk. Margin traders have turned extremely bullish. To confirm whether these movements were confined to the specific options instrument, one should analyze the margin markets. Lending allows investors to leverage their positions to buy more cryptocurrency. When those savvy traders open margin longs, their gains, and potential losses, depend on the Ether price increase. Bitfinex margin traders are known for creating position contracts of 100,000 ETH or higher in a very short time, indicating the participation of whales and large arbitrage desks. Interestingly, these margin traders greatly increased their longs since June 13 and the current 491,000 contracts is near its highest level in 8 months. This data shows that these traders are effectively not expecting a disastrous price move below $900. While there hasn't been a significant shift in pro traders' options risk metrics, margin traders remain bullish and are unwilling to decrease their longs despite the crypto winter. If these whales and market makers are convinced that $880 on June 18 was the absolute bottom, traders may begin to believe that the worst leg of the bear market is behind us. 5 events that could put an end to the current crypto bear market. Crypto bear markets are rough, but there are 5 moonshot events that could turn the ship around. Much to the chagrin of cryptocurrency investors across the ecosystem, the bear market has officially set in and brought with it devastating price collapses that have left relatively few unscathed. As the popular topic of conversation now centers on bearish predictions of how low Bitcoin, BTC, will go and how long this iteration of the crypto winter will last. Those with more experience on the matter know that it's virtually impossible to predict the bottom, and it would be wise to apply those energies elsewhere. Instead of focusing on the when of the end, perhaps it's more constructive to explore what events might help pull the market out of the bear market depths and put it on a path to its next upcycle. Here's a look at 5 potential catalysts that could pull the crypto market out of its current malaise. A successful Ethereum merge. One of the most highly anticipated developments of the past 5 years has been the ongoing transition of the Ethereum network from proof of work to proof of stake. While the process has been a drawn-out one that has faced numerous setbacks, the official switch is now closer than ever following the successful completion of the merge trial on the public test network Sepolia. It's possible that the building hype around the Ethereum merge could help pull the crypto market out of its bearish state should the transition go off without a hitch. Especially if it helps lead to more scalability and a faster user experience. As it stands right now, the merge is set to take place in August 2022. It should be noted that a successful merge could also lead to a buy the rumor, sell the news type of event where prices briefly pump due to the euphoria of crypto holders, only to fall back down once the dire state of the global financial system comes back to the forefront. Approval of a spot Bitcoin ETF. Another event that has been rumored for years that could spark a crypto revival is the passage of a spot Bitcoin exchange traded fund, ETF, for United States markets. Ever since 2017, when the first BTC ETF proposed by the Winklevoss twins was denied by the U.S. Securities and Exchange Commission, second, there has been one rejection after another for any physically backed Bitcoin ETF proposal put forward. Reasons for the rejection typically revolve around the charge that cryptocurrency markets are easily manipulated and the proper safeguards are not in place to protect investors. If a spot ETF were to be approved, it would render this long-running objection moot and bring a new level of legitimacy to Bitcoin and the crypto asset class as a whole. This has the potential to usher in a new wave of institutional adoption that could bring about the end of the crypto winter as new funds flow into the market. The Fed reverses course. Don't fight the Fed is a common expression investors use to explain one of the most influential forces on global financial markets. After multiple years of easy money policies and near zero interest rates, the U.S. Federal Reserve approved an interest rate hike of 0.25%, the first rate hike in more than 3 years. Since then, the Fed has implemented 2 additional rate hikes of 0.5% and 0.75%, bringing the current benchmark interest rate to a range of 1.5% to 1.75%. During the same period of time, risk assets around the world have been falling in price, with Bitcoin declining from $48,000 at the end of March to its current price, which is trading near support at $20,000. The historic rise in the cryptocurrency and legacy markets that was witnessed in 2021 was largely driven by the easy money policies of the Fed. and it's highly likely that a return to such policies would once again see funds flow into the crypto ecosystem. Major adoption of Bitcoin as legal tender. 2021 saw El Salvador become the first country in the world to adopt Bitcoin and as a legal tender for use by its citizens. While the use of BTC as a legal form of tender has been a long-running goal of crypto proponents, and the decisions by El Salvador and CAR are worth celebrating, its adoption by such small players on the world stage has done little to promote more mainstream acceptance. That would likely change, however, if a larger market such as Japan or Germany were to open up to officially promoting the use of BTC by their citizens for their daily purchases. Recent developments on the global stage, including conflicts and food shortages, are pushing governments to do things they never considered. And it's not outside the realm of possibility that a larger economy could turn to Bitcoin as a currency of last resort as fiat currencies continue to lose their purchasing power. Integration as a payment option by a large company. A common excuse as to why people don't use Bitcoin or cryptocurrencies for their everyday purchases is because it's not really accepted anywhere. While there are options available for accessing the value held in crypto, such as debit cards and online payment integrations with platforms like Shopify, the ability to make purchases by conducting transactions directly on a blockchain network is relatively limited. On several occasions, Elon Musk has demonstrated that the mere mention of integrating blockchain-based payments can spark a market rally for the token in question. Based on this and other examples of price pumps that followed speculation about a major adoption announcement, it's likely that crypto payments being integrated by a major company such as Amazon or Apple could spark a bullish wave of momentum. DeFi giant Aave unveils plans for new decentralized stablecoin based on Ethereum, ETH. A popular decentralized finance, DeFi, protocol is preparing to launch its own community-supported US$peg stablecoin. In a new announcement, lending and borrowing platform Aave says it will build the new stablecoin, known as Go, on leading smart contract platform Ethereum, ETH. The crypto project's decentralized autonomous organization, DAO, will be responsible for approving and then governing the token. Go will provide a level of security and decentralization that is inclusive for crypto-native users while also using a growth strategy that emphasizes its use cases for a growing mainstream audience. Go will be over-collateralized by assets that continue to earn yield, backed by multiple types of collateral available on the Aave protocol, and governed by the Aave community. The borrowing process for the stablecoin will mirror Aave's traditional model where users provide sufficient collateral for new Go to be minted. Later on, repaid or liquidated positions result in the tokens being burned while collected interest will go to the Aave DAO treasury. Aave says it's dipping its toes into the world of stablecoins because they provide fast, convenient and secure transfer of fiat dollars over blockchains. Stablecoins have reached a central position in the cryptocurrency space, now standing at an approximate $150 billion market capitalization. Stablecoins provide a fast, efficient, borderless and stable way to transfer value on the blockchain. Decentralized stablecoins add transparency and censorship resistance to this list of benefits, an integral part of Web3. The usage of stablecoins will only continue to grow as crypto assets become further integrated with a user base that is less crypto-native. Decentralized stablecoins provide censorship-resistant fiat-denominated currency on the blockchain. At time of this video, Aave is up 12.55% on the day and trading for $71.96. Dogecoin, Tesla CEO Elon Musk wants to keep supporting $Doge wherever possible. On Wednesday, July 6, Tesla and SpaceX CEO Elon Musk once again voiced his support for popular meme-based cryptocurrency Dogecoin, $Doge. Dogecoin was initially released on December 6, 2013, as a fun and friendly internet currency. It was created by Billy Marcus and Jackson Palmer. It is a decentralized, peer-to-peer digital currency that has as its mascot Doge, a Shiba Inu, a Japanese breed of dog. Since then, its popularity has substantially increased, especially this year, mostly thanks to support by billionaires Elon Musk, the CEO of Tesla and SpaceX, and Mark Cuban. To the point that it is currently the 10th most valuable cryptocurrency, with a market cap of over $9.26 billion. In fact, in 2019, Musk said that Doge might be his favorite cryptocurrency. On June 19, Musk tweeted that he will keep supporting Dogecoin, which was not too surprising given that he has been saying nice things on Twitter about Dogecoin for the past 3 years. What was surprising, though, was what the Tesla CEO said after one anonymous crypto analyst, Altcoin Gordon, challenged him to buy Doge, to which Musk replied that he is. Then, on July 6, CNN Business reported that The Boring Company, the American infrastructure and tunnel construction services company founded by Elon Musk in December 2016, has launched a way for customers to pay for rides on Loop, its underground public transportation system, which is currently available in Las Vegas, Nevada. The CNN report went on to say, Loop consists of passengers traveling in Tesla vehicles that are driven by humans at about 35 miles per hour. A significantly scaled-down version of founder Elon Musk's original vision of high-occupancy vehicles moving at 150 miles per hour. The Boring Company has described automating the driving and traveling at higher speeds in the future. The new payment option surfaced Friday as the Boring Company opened its first Loop station outside the Las Vegas Convention Center, which already has 3 stops. It's also the latest example of Musk promoting Dogecoin, the cryptocurrency whose value has fallen sharply in the last year. The Boring Company hopes to eventually expand to more than 50 stations on the Vegas Strip, including casinos, resorts and Allegiant Stadium, home of the NFL's Las Vegas Raiders. Clark County, Nevada, approved the expansion plan last year, which won't use taxpayer dollars. Rides are currently free on Loop, with plans to charge eventually, though the company has not disclosed specific timing. Single rides will cost $1.50 and day passes can be purchased for $2.50, according to the Vegas Loop's website. Riders will be able to scan a large QR code on a wall at the new resort's World Station to purchase a ticket. People who don't wish to pay with Dogecoin can use a traditional credit card and US dollars. Shortly after the CNN Business report got published, Musk tweeted that he would continue supporting Doge wherever possible. JP Morgan lost these 3 execs to crypto firms this week despite crypto winter. JP Morgan Chase & Co., America's largest bank, has witnessed the departure of 3 of its top executives this week. In what seems like a crucially planned exodus, the top executives of the investment bank have secured positions in different firms within the crypto space, notwithstanding the current crypto winter that has taken a toll on certain entities. Eric Raga left for Algorand Foundation after 21 years at JP Morgan. The 3 execs all left on separate occasions in the space of 1 week. The latest to depart from JP Morgan is Eric Raga, co-founder of Rochester Square, who recently served as managing director in the bank. Raga left JP Morgan after having worked in the bank for 21 years, securing several positions from April of 2000. Raga's career path recently led him to the Algorand Foundation, where he was appointed as Global Head of Business Development and Capital Markets. His appointment was announced on the official Algorand Foundation website on 5th of July. Another employee to depart the bank is Pooja Samuel, who worked in the investment bank for 3 years as head of ideation and digitization. Samuel joined Connecticut-based venture capital company Digital Currency Group as head of corporate development. "I am excited to help build out new strategic partnerships alongside an energized team that is driving change across the financial system," she said, further expressing gratitude to her former colleagues at JP Morgan for being part of her professional journey. After 12 years working with the bank, Samir Shah is the third of the bunch to exit JP Morgan. Shah joined American hedge fund Pantera Capital as chief operating officer. In his 12 years at JP Morgan, Shah secured several positions, the latest of which was head of asset management sales. JP Morgan believes Bitcoin is undervalued. Early last month, JP Morgan expressed a readiness to tokenize U.S. Treasuries or money market shares in an attempt to bring these trillions of dollars of assets into DeFi. Tyron Laban, head of Onyx Digital Assets at the bank, disclosed this. 2 months back, despite the bear market that sank the firstborn crypto, JP Morgan strategists led by Managing Director of Global Market Strategy at the bank, Nikolaos Panagurtsoglou, mentioned that they believe Bitcoin is massively undervalued. Sometime in May, the investment bank also issued a note to its clients, informing them of plans to replace real estate with crypto assets as a preferred alternative asset class. Recall that, in April, CEO Jamie Dimon and crypto critic who once termed Bitcoin useless, affirmed that blockchain and DeFi have valid use cases. Don't forget to like, subscribe and turn on the notification button so that you won't miss any updates.